Welcome back. You're watching Markets Today, and now let's go over through the rest of the headlines that we're tracking for you. Now, the fourth headline is HDFC AMC zoomed 5% after US-based GQG Partners sold part of its stake in the company via open market transactions. The firm has sold nearly 25 lakh shares at 1,600 rupees per share, while SBI Mutual Fund has bought over 47 lakh. Vivek is standing by with the details. Vivek?
HDFC AMC, it's actually given the fact that the overhang of further stake sale from GQG Partners has now gone away. So in yesterday's block deal, almost 2.2% stake is something that they've exited, and SBI Mutual Fund has picked up the entire stake. But when it comes to HDFC AMC, very interesting figure and expected to play out over the next couple of quarters at the earliest. Aberdeen Investment Management, actually on December 6, 2022, had intimated that they are looking to exit their entire 10.21% stake, out of which 9.9% stake they were looking to sell to one single interested party. So now once that happens, analysts believe that the stock that was deleted from the MSCI index will once again get a re-entry back, and also the overhang of any sale goes away.
Thank you very much for that. Moving on to the other stocks making headlines today. PVR gained after Warburg Pincus exited the company. UTI AMC also rose after PPFAS brought a large block. Surbhi is here with a wrap on all that action in these two stocks.
Thanks for that. So PVR and UTI AMC both have gained traction today in today's trading session on back of some interesting block deals. Now, firstly for PVR, where Warburg Pincus, through its affiliate Berry Creek Investments, has sold its entire 2.49% stake in the company. Now, the transaction totaled toward 380 crores, and major mutual fund houses were the buyers there. SBI Mutual Fund House bought shares worth 229 crores. ICICI Pru also bought stake worth 100 crores, which is close to 6.4 lakh shares, and Society General bought 3.2 lakh shares. Next is UTI AMC, which also surged in trade on back of some block deal where PPFAS Mutual Fund bought 11.2 lakh shares at 636 rupees per piece to a total of 714 crores.
Thank you for that. Let's get to the fifth and the final headline. It would be a mistake for the Adani Group to pause growth plans. That's the word coming in from Rajiv Jain of GQG Partners. Speaking exclusively to CNBC TV18, Jain emphasized on the need for the group to avoid making changes solely to please the market. Rajiv Jain, remember, has invested nearly $2 billion into the Adani Group and believes the investment is not risky. Listen in.
So our view is that they need to keep pushing for growth while managing the debt level, which I think they've already done that. I mean, they announced some of the shelving of the project, so on and so forth. So I think it'll be a little more manageable from the debt perspective, although we are not concerned as at the current point from a debt side. But I think the objective is to keep growing. Look, I think it'll be a mistake to slow down to get the debt levels down. I think these businesses are supposed to be levered. That's the model. So debt has to be in a sort of in a measured way. However, our view is that don't change anything to please the markets. Coming back to US, the problem so far is limited to Silicon Valley connection. If you look at the amount of frothiness you had in tech space in US and the rest of the world, frankly, I used to think that some of these venture capital firms are delusional. And Silicon Valley Bank has a long history of bad behavior. We are not concerned about contagion risk.
Okay, let's move on. Sterling and Wilson gained 7% in trade today after bagging a 2,100 crore order from NTPC Renewable Project. Yash is here with the details.
Well, significant order win as far as Sterling and Wilson Renewable is concerned. They've received an order from NTPC worth 2,100 crore rupees. The place of execution is Gujarat. Now, as far as the order itself is concerned, it's a 1,200 megawatt PV project which comprises of 4 blocks, 300 megawatt each. What sources have told CNBC TV18 is that the order is expected to be awarded in the next 40 to 45 days. NTPC for this particular order is expected to import the modules, which may lead to a faster execution of the project itself. And out of that 2,100 crore, according to our sources, about 1,400 crore is expected to be executed in FY24 itself. Importantly, as per our sources in the company, about 10 to 12% of the gross margin is what the company may receive as far as this order is concerned. Very important to point out that this order which they've received yesterday is not supposed to be confused with the order which Sterling and Wilson Renewable received in the month of August 2023. That was a 2200 crore order. This is a 2100 crore additional order which they've received from NTPC. The place of execution remains the same. So in totality, the total order which has been received in the last 1 year from NTPC towards Sterling and Wilson Renewable is about 4,300 crore rupees.
Thank you very much for that. Moving on, HDFC CEO K.K. Mistry has said that the HDFC Limited HDFC Bank merger was approved faster than anticipated. In conversation with CNBC TV18, he also added that the merger will be completed by late June or early July.
The approvals, some of the approvals came faster than we expected, so we are absolutely on track. And my sense is that sometime towards the latter part of June or probably July is the time when the merger will get completed in all respects.
Moving on, the two-day meeting of the US Fed starts tonight. Will the Fed bite the bullet and hike rates amid the global banking turmoil? The CNBC Fed Survey shows 72% of the market participants are expecting a rate hike, but only 51% say the Fed should hike rates. Steve Leesman is here with more.
This is an unusual meeting in extraordinary times, and it gives us a sort of unusual survey with a lot of uncertainty and disagreement about what will the Fed do and what should the Fed do. Take a look at our Fed expectations chart. 72% say there's going to be a hike, which is pretty much in line with how the market is priced. Interesting because our survey was from the end of last week. But 52%, only 52% say the Fed should hike. So some percentage think the Fed ought to hold its powder right here. And the peak rate remains pretty high, actually higher than it was at 5.20 for June. But then 86% say the Fed either cuts or pauses at the next meeting in July. So, okay, here's the thing. We asked, what's the more important driver of Fed policy? Protecting financial stability and the health of the banking system or reducing inflation? 52% say it's financial stability rather than inflation. Here's some of the commentary we got. Joe Lavorgna from SMBC Nikko Securities writes, continued hawkishness from the Federal Reserve would justify a further marking down of our forecast for growth and recession severity. And then we have Mark Vittner of Piedmont Crescent Capital. He says the Fed's earlier missteps on inflation and its abrupt correction this past year laid the foundation for the crisis we face today. The Fed should not compound its earlier mistake by giving in too early in the inflation fight. What about the outlook for recession? 55%. It's up from the prior survey at 51. 57% say it's going to be a mild recession. And then interestingly, September 2023 is the average start date. That's a quarter later than the last survey. That's because we've had this strong growth in the first quarter, and the average length of the recession seems being 8 months. The Fed's decision tomorrow comes down to pretty much what you guys were just talking about. I think whether it feels the banking turmoil has settled down and whether it can handle monetary policy and inflation with one set of tools and financial stability with a different set. That's what Lagarde said last week, guys. I just don't know if the Fed wants to run that experiment right now.
Well, with that, it's a wrap on this edition of Markets Today. Thank you for watching.